Chipotle Mexican Grill Stock Analysis, July 25th. Hello, investors, and welcome back to our daily stock market roundup. Today, we're diving deep into Chipotle Mexican Grill, ticker CMG, trading on the NYSE. Buckle up as we break down the action from April 28th to July 24th and unpack what's driving this fast casual giant stock price. Let's get started. Over the past 3 months, CMG has been a roller coaster for traders. The stock kicked off on April 28th at an opening price of $51.94 and carved out a dynamic range, hitting a low of $45.13 and a high of $58.42. By July 24th, 2025, CMG closed at $45.74, a sharp drop of 31% from the previous day's close of $52.78. This plunge was fueled by an explosive trading volume of 86 million shares, nearly 6 times the 3-month average of about 13 million shares daily. Such a volume spike screams market tension, likely tied to a major catalyst like earnings, news, or sector-wide sentiment. Let's dig into the numbers to see what's cooking. Looking at the price action, CMG showed strength earlier in the period, peaking at $58.24 on July 1st. This rally pushed the stock above its 20-day simple moving average, which stood at $54.49 on July 24th, and even flirted with a 50-day SMA of $52.76. However, the recent sell-off has dragged CMG below both its 5-day SMA of $51.46 and 10-day SMA of $52.90, signaling a bearish shift in the short term. The 20-day exponential moving average at 53.17 further confirms this downward pressure, as the stock is now trading well below this key level. Let's talk technical indicators, because they're telling a compelling story. The Relative Strength Index, or RSI, clocked in at 25.29 on July 24th, firmly in oversold territory. For those new to the game, an RSI below 30 often suggests a stock may be undervalued and could be poised for a bounce, but it's no guarantee. Momentum can stay weak if sentiment doesn't shift. The Williams percent R, sitting at negative 94.88, echoes this oversold signal, while the Money Flow Index at 22.32 shows limited buying pressure. Together, these indicators paint a picture of a stock under heavy selling, possibly offering a chance for bargain hunters if the trend reverses. The MACD is another key player here. On July 24th, the MACD line was negative 0.70, with the signal line at 0.21, giving us a histogram of negative 0.91. This bearish crossover confirms the downward momentum, suggesting sellers are still in control. However, the oversold conditions could mean we're nearing a point of exhaustion, so keep an eye out for a potential reversal signal in the coming days. Volatility is a big part of CMG's story right now. The 14-day average true range, or ATR, stands at 176, indicating significant price swings. For context, this means the stock could move roughly 76 points in either direction on a typical day. For intraday traders, this volatility offers opportunities but also risks. Tight stop losses are a must. The stock's beta 117 shows it's slightly more volatile than the broader market, so expect some spice in your portfolio if you're holding CMG. Let's zoom out to the trend. The Arun oscillator at negative 100, with a run down at 100 and a run up at 40, screams a strong downtrend. This tells us the bears have been dominating, with new lows outpacing new highs. The Chaikin oscillator at negative 90 million further highlights weak accumulation, as selling pressure has outweighed buying over recent sessions. Now, let's map out support and resistance. On the downside, the recent low of 45.13 from July 24th is a critical support level. If this breaks, we could see CMG test the psychological 45.00 level, where buyers might step in. On the upside, resistance lies near the 5-day SMA at 51.46, with a tougher barrier at the 20-day SMA of 54.49. A break above 54.49 could signal a return to bullish territory, potentially targeting the July high of 58.24. What about the next trading day? Based on the momentum and closing price of $45.74, we estimate the opening price on July 25th could hover around $45. 50 to 46.00, assuming no overnight catalysts. Using the 14-day ATR of 176, the intraday range might stretch from 43.74 to 47.50. Bulls will want to see a push above 46.50 to regain confidence, while bears could target a retest of 45.13 if selling persists. Let's explore possible scenarios. In a bullish case, if positive news, like strong same-store sales or a broader market rally, lifts sentiment, CMG could bounce toward 48.00 or even 50.00, especially given the oversold RSI. In a bearish scenario, if the selling pressure continues, a break below 45.13 could open the door to 43.00, though oversold conditions might limit the downside. A neutral case sees CMG consolidating between 45.00 and 47.00 as traders await fresh catalysts. Volume analysis adds another layer. The massive 86 million shares traded on July 24th dwarfed the average, suggesting institutional activity or panic selling. The on-balance volume, or OBV, at negative 96 million, reflects cumulative selling pressure over the period. However, the volume spike could indicate capitulation, often a precursor to a reversal if buyers step in. For risk management, CMG's volatility demands discipline. Swing traders might set stop losses below 45.13 to limit downside risk, while long-term investors could view this dip as a potential entry point, given Chipotle's strong brand and growth potential in the fast casual space. Always align your trades with your risk tolerance and time horizon. In conclusion, CMG is at a pivotal moment. The sharp drop in oversold indicators suggests a potential inflection point, but the bearish trend and high volatility call for caution. Watch for a break above 46.50 to signal recovery, or a drop below 45.13 for further weakness. With Chipotle's fundamentals still solid, this could be an opportunity for patient investors, but timing will be key. Stay sharp, keep your charts close, and trade wisely. That's the full scoop on Chipotle Mexican Grill. Join us tomorrow for more market insights. Until then, happy investing.